There's an impression out there that getting a mortgage on a condo is difficult or in some cases impossible. And while there are some situations where getting financing on a condo could be a little bit more difficult, there are a lot of other mortgage programs out there that can typically accommodate it. Why is getting a mortgage on a condo difficult in the first place? Well, on a condo, as opposed to, say, a single-family home, there's typically a condo association involved. And why is that important? Well, that condo association has a lot of roles with regard to that property, with regard to the condo. One of them is they typically handle a master insurance policy that covers in damage that might be done to the property, to the actual condo. It also governs and maintains common property in the development. That condo association often has a board and it has bylaws that kind of govern what it can and cannot do. Why is that important? Well, because they can have an influence on the condo development itself. So the bank that's approving your mortgage not only wants to make sure that you're a good credit risk as a borrower, also wants to make sure that the condo association is also a good credit risk because they have this common interest in the property. So how do you find out whether or not the condo association meets the approval criteria to get a traditional mortgage? And in the mortgage industry, we call that ensuring that the condo is warrantable. Well, the bank approving your mortgage will collect a condo questionnaire from the condo association, and they're answering questions like, are there primary homeowners, second homeowners, investment property owners? Is there a check-in desk in the lobby downstairs? If it's mostly investment properties, it starts to give the impression that it might be more of a hotel than a condo, and you'll sometimes hear the phrase a condo-tel. Are there dues that are owed or past due? Dues from the homeowners. Why is that important? Well, those dues help fund the insurance policy, that master insurance policy. So it's important to know if the dues are coming in, they have enough money to make those payments. It's also going to review the master insurance policy. Is the policy adequate? If for some reason the condo does not meet some of this criteria, generating a non-warrantable condo, that doesn't mean you can't get financing. In fact, there's a lot of programs out there with very similar 30-year fixed rate mortgage products for a non-warrantable condo. So the message here is don't run from a condo simply because you've heard that it's hard to get financing. It's important to have those conversations with the lender early and often to vet what you can and cannot do with that property. I hope this helps you. If it does, give the video a like and a subscribe. We always appreciate that. It helps the channel, and hope you have a great day.